It's oftentimes that I can get accused of investing in boring businesses. Companies that are very large, dominant, financial powerhouses that honestly do nothing but generally go up and to the right the further out the stock chart looks like. I invest in boring companies like Amazon. I invest in boring companies like Google. These are the type of investments I'm interested in. However, I am interested in some stocks that are a little bit of a wild card. What type of wild cards am I talking about? Well, this is a perfect example. We're talking about AppHarvest. AppHarvest is a $1 a share price company. This thing is basically a penny stock. And while this company may be very small, it just could be the opportunity of a lifetime. Now, I want to start off by saying that I do not own this company. If you hop over here and look at my spreadsheet and you look at my holdings, you can see that I currently own 4 companies in my growth portfolio. Now, other than Crocs, 3 of the 4 in this portfolio, about 80% invested, is into very large cap, very profitable companies. This is a defensive portfolio that generally invests in growth companies that are pretty much sure bets. Now, that has been successful so far. I've been growing my balance over time, and that's been a mixture between contributions from my daily paycheck, the growth of the YouTube channel, and then of course the growth of my investments, which by the way currently sits at $38,000 as of the time of me filming, which I've grown over the course of 2.5 years being in YouTube. Now, this company right now only has one location. If you want to take a look at this picture right here, which I just showed a second ago, this is in Moorhead. This is their big founding location that they started just from the beginning. And this huge reservoir of rainwater here is basically what powers the whole thing. That and sunlight is the bare bones of what grows all of its vegetables, all of its products. And the cool part is, as you can see from this screenshot here, there's not just one farm. There's 4 in this photo in the Berea, Somerset, and Richmond locations. Some of these are coming online right now as we speak. How do we know this? Well, if we look right here, we can get a snapshot of the earnings call. This is the quote directly from the earnings call, and we're going to go over that in this video. We're going to talk about AppHarvest, what they have now, what they might have in the future, and what this company could have as a wild card that could take them to astronomical levels. We're going to talk about all that in this video. It's going to be a fun one. Thank you so much for tuning in. My name is Jordan. I'm a Millennial Investor. If you want to check out all my stuff, all my portfolios down below in the description, as well as other things involving my M1 Finance account, credit card referrals, check out all the stuff down below in the description, and you can get $10 for getting signed up for free. Thank you guys so much for watching, and without further ado, let's go ahead and read straight from the earnings call what we have right here. Straight from the CEO of the earnings call, it says, quote, "In a period of global geopolitical conflict, water resource limitations, and food security disruptions, we believe AppHarvest's business model positions us well against incumbents to grow and sell domestically with the 3 new farms we expect to bring online this year. We also have made progress on the previously announced potential joint venture FarmCo." Now, the key part of this is that right here it says to grow and sell domestically with 3 new farms we expect to bring online this year. Notice from the screenshot we just have Moorhead up and online, and when this came out, this was only about a week or so ago. Those of you that are watching this in the future, I'm filming this in mid-November of 2022. So if you're watching this in the future, a couple weeks, a couple months from now, by the time you're watching this, likely all 4 of these are online. And these should be coming online maybe any day now, maybe within the next couple of weeks. They said this year, and we only have about 45 days left of the year. So that means that these should be coming on any moment now. And if we hop over to Qualtrim here and we type in ticker symbol APPH, we look at AppHarvest stock, you can see that AppHarvest has not been a fun stock to be in. You can see that it's lost buku bucks. It's lost so much money. It loses tens and sometimes even hundreds of millions of dollars a quarter, but that's not because of them selling their products. It's strictly because they're reinvesting back into the business. Look at how much they're spending on capital expenditures. For example, in the most recent quarter, they spent $73 million in capital expenditures, and their free cash flow was negative $123. So the vast majority of these losses are strictly coming from capital expenditures. Now, the big risk here at this company is that they're a micro cap stock, $133 million. And if we pull up M1 Finance here and we look at their stock price, you can see it has been absolutely obliterated, decimated. I mean, thrown into the floor and forgotten about. This company is just, it doesn't get very good. Actually, I forgot, M1's Finance doesn't even offer it anymore, so we'll have to pull this up on Qualtrim. Let's look over the last year. Year over year, this company is down 78%. 78% is pretty dramatic in my opinion, and it doesn't get much worse than that. If you look over the last 2 years, it's down 90%. And from its all-time high, it's literally down like 97% from its all-time high at around $40. The all-time chart from this company going public at $10 via SPAC merger, yeah, it hasn't been very good, and it doesn't seem to be getting much better. Now, here's the caveat, and here's the reason why I talk about this company, because there's mainly two reasons. The first one being, I invest in very profitable growth companies, and I typically don't look at speculative plays. Like I said, I invest in very large cap dominant companies. For example, 2 of the 4 companies that I have in my growth portfolio are trillion-dollar businesses. Amazon could literally buy this company as a rounding error, and I'm not even exaggerating. They have billions and billions of cash on hand. Another one, like Google, for example, that currently, as of today's close, is a $1.26 trillion business right here, and they have a net cash position of $100 billion with a B. So to talk about a company like AppHarvest that has $100 million with an M, they could literally buy this entire company for 0.1% of their cash. And this leads me to the reason why this company interests me for 2 reasons. The first one is, it's not very often that I invest in speculative companies that are unprofitable, micro-cap, risky companies, and that's the first reason. And the second reason is this little piece of equipment right here. Root AI. Does this look familiar? If you're an investor in the company, or you're potentially looking at investing in it, this is the one wild card that I see as a potential that could be, not saying it is, this is a very risky investment. So I do not have money invested, I do not own shares, nor do I recommend buying this company without knowing ahead of time that this is a bankruptcy risk company. This is not a company that's a safe investment. You could lose money very, very easily. So know that going into it. However, the wild card here, this little booger called Root AI, could be a potential opportunity for this company to scale massively. See this cool piece of equipment here? What it's doing is it will look at the products and the plants that it's trying to collect, and it will gather images, tens of thousands of images of those. In this example, it's showing tomatoes and how it plucks them. It will take pictures of those products and will recognize which ones are ready to pick and which ones are not. Now, the reason this is so cool is for 2 main reasons. The first one is, they don't have to pay a human to do it. See the guy in front of it and see him in the background, he's kind of blurry? He's picking these by hand, and then the robot is doing its own thing. It's spinning in a 360, plucking him right off the deal. And guess what? This robot doesn't have to be paid health insurance. This robot doesn't call in sick. This robot doesn't need a pension plan, a 401k, an IRA. This robot plugs in and gets to work. It's that simple. And so I see 2 main opportunities here. The first one being, it can obviously operate at a much cheaper price than that of a traditional human. But the second main thing is, they can use these technologies to license out to other businesses that are trying to build out these farms. And that's where the real profitable opportunity is. It's not from growing tomatoes and then selling them at this big farm. That's really cool that they're able to do that. They're able to do it cheaply, and this is also a public B corporation, meaning it's for public benefit, which is another cool thing about them. But at the end of the day, in terms of actually making money, it would likely come from their AI opportunities with Root AI, selling and licensing their robotics and the technology that they've invested in to hopefully draft this type of technology and to license it out to another business like an AppHarvest. Now, lastly, the one thing I want to mention about this company and why I find it so appealing is that while this company has started to burn through its cash, as you would expect as it's building out $100 million farms, is that if you look at the company's valuation, you see that it's currently $133 million. And so this begs the question, when I look at this property, all the acreage that comes with it, the massive amount of buildings, the equipment, all the technology that they have, what is just this one building worth? What is the value of this actual building and the property it's located on and the equipment around it? I don't know about you, but I would guess that this one property is likely several tens of millions of dollars. And so that begs the question, what are all 4 of these properties worth? If each one of them are likely worth tens of millions of dollars each, would it not be safe to say that it is likely that this company value just in terms of its building and equipment is likely $100 million plus? Well, I find that very interesting when its total company value is $100 million plus. And it does make sense when this company, as of today, has basically no revenue and obviously no profits because the company is basically like investing in a startup. What you're not really investing here is a profitable business. What you're investing here is the opportunity for a startup to hopefully make some money in the future. However, I think that these buildings have got to be worth a lot of money. So that's the one interesting part here. That's kind of the caveat why I might consider investing in them. And while I do intend on maybe buying some small amount of shares, keep in mind that this will be a very small percent. I would likely keep this in the single digits. This would likely be just like a couple percent of my portfolio. This is not going to be some big investment because this is a very, very risky stock. However, I might buy some shares while it's so stinking low just for the fun of it because why not? It would be a fun little experiment, a fun little growth stock, a fun little speculative story to invest in because also it's for the public benefit and I support that in the mission that they're trying to do. Thank you guys so much for watching. Check out M1 Finance if you haven't already. Get $10 for getting signed up. But other than that, guys, thank you so much for watching and I'll catch you guys next time.